Chris Cap. Welcome back to Market Talk Tuesday, where we break down the Oviedo and Winter Springs housing market so you know what's actually happening instead of what the headlines are telling you. And this week, we're going to answer a question I've been getting a lot. What happens if mortgage rates actually start dropping later this year? Because the Fed has been hinting at rate cuts, and a lot of people are wondering if they should wait. So here's the numbers this week. Current listings on the market, 341. Median list price, 490,000. Average days on the market, about 2.5 months, 78. Pending houses this week, 36. 23 sold houses this week. Median sold price is 451,000. Average days to contract 29, and our sold to list price is 99%. Imagine you're watching a World Cup match. Right now, buyers are kind of standing around midfield. They're interested. They're watching. They're waiting for an opening. Rates around the low 6% range have a lot of buyers saying, we'll jump in when the rates come down. The problem is, everybody's thinking the exact same thing. What happens if the rates drop? Let's say mortgage rates fall from 6.2 to about 5.5 or even low fives. A lot of people assume lower rates automatically mean cheaper houses. Usually the opposite happens because lower rates don't just mean lower payments. They bring more buyers into the market. People who were sitting on the sidelines suddenly jump in. People who couldn't qualify before now can qualify. People who wanted to move suddenly decide now's the time. Think of it like a corner kick. Right now, there are only a handful of players in the box competing for the ball. If rates drop, suddenly the entire team rushes into the box. The goal didn't get bigger. There are just more players trying to score. And that's exactly what's happening in the housing market. The inventory doesn't magically double overnight, but demand can increase very quickly. More buyers chasing the same houses, more means more competition, more multiple offers, less negotiating power, faster sales, higher prices. Everybody's focusing on the payment statement. Very few people think about the competition. Let's do some simple math. If rates drop and someone saves about $200 to $300 a month, great. But if that same rate drop causes house prices to go up $20,000 to $30,000 because the buyers are back in the market, now you've only saved a little bit on the monthly payment, but it paid a lot more for that house. And that's why waiting for rates to fall isn't always the slam dunk people think it is. The reason I bring this up is because our local numbers are already showing demand. We've had 36 houses go pending this week, and homes are still going under contract in 29 days. Sellers are still receiving 99% asking price. That's with rates where they are today. Imagine what happens if borrowing gets noticeably cheaper. The market may not go crazy like 2021, but it could definitely get more competitive than it is right now. If you're waiting solely for rates to drop, understand that you may be trading lower rates for a higher competition. And remember, you can refinance later. You can't refinance the price you paid for the house. Now for sellers, a rate drop could bring more buyers back into the market, and that means more showings, more offers, and potentially stronger pricing power. So if rates do start coming down later this year, don't think of it as the final whistle that makes homes cheaper. Think of it as a referee signaling the start of the second half. A whole lot of buyers who've been sitting on the bench, they suddenly enter the game. And when more players are chasing that same ball, things get competitive fast. If you're wondering whether you should wait now, buy now, or sell before the rates change, reach out and let's talk some strategy. Until next Tuesday, I'm Chris Cap at Luker & Co. See ya.